Hello and welcome everybody to a special segment we like to include in our events called Analyst Insights. My name is Adam Lowensteiner, Vice President of Lytham Partners, and today I'll be moderating a discussion on the medical device and MedTech sector to determine where we are in the cycle and what are some of the reasons for investing in the space. Joining us for this discussion is Mr. Jeff Cohen, Director of Research and Managing Director of Healthcare at Ladenburg. Jeff brings a wealth of knowledge in the medical device and MedTech space, and we're very excited to have him for this conversation. Hi, Jeff, and welcome to the conversation.
Hi, Adam. Thanks for having me. I appreciate it.
So, maybe to kick things off, can you tell us a little bit about your background in the industry you cover?
Sure, happy to do so. So thanks for having me in advance. And I've taken a bit of an unconventional route, originally a systems engineer by training with 3 years of work in engineering, at which point I moved to New York and spent 5 years trading equities and fixed income derivatives. Then spent 2 years in London at Cantor Fitzgerald, where I was on a European bond desk. Found myself doing healthcare research sales back in the States for a few years prior to publishing and becoming an analyst in '08. So I guess sector-wise, I started out cardiac and vascular, and I'd say now cardiac, vascular, ortho, spine, energy, diagnostics, genomics, aesthetics, ocular, and diabetes. So I've been at Ladenburg since 2011. Ladenburg was publicly traded. It was acquired by Reverence Capital Partners, which acquired Advisor Group approximately 5 years ago, which rebranded themselves to Osaic. So Osaic's got 11,000 FAs, 700 billion AUA, and that's kind of where we are embedded. Ladenburg's largely unchanged, although swims within our parent company.
Great. At times, investing in medtech has been somewhat of a cyclical trade, but recently there are many interesting tailwinds and catalysts to, especially newer technologies that are making it to the marketplace. What's your take on the current cycle? Where are we today?
I would say, generally speaking, adoption and awareness is far more transparent in the marketplace. I think consumers of healthcare are becoming far more intelligent and have learned a lot. They've also been encouraged to learn a lot more thanks to COVID over the past 5 years. So on the financial front, I would call that out and talk about more transparency and more scrutiny, if you will. What we're seeing the past, I would say, 5 or 10 years is certainly more newer technologies. I would say, generally speaking, it used to be larger technologies and less of them, kind of larger waves, if you will, whereas now we're seeing a lot more ripples of increased technologies. Earlier, specifically of note to call out is probably areas like energy and imaging in the marketplace.
So we've seen a lot of advancements in med tech, from use of stents to robotics to pill cameras. How does the technologies of today compare with those, say, of 10 to 20 years ago?
Good question. I think what we're seeing now is more next gen and follow up and future generations of some of those previous technologies as they advance, but we're definitely seeing more advancement and more technologies at a more rapid pace. So, whereby a decade ago there were scores of companies going after a segment, now we're seeing more by far. And I think we're also seeing a lot of data and analytics as that continues to fuel the pace of innovation, both software, mostly software on the analytical side.
So as you mentioned before, COVID was a difficult time for the industry. A lot has changed as a result of that. Yeah, how has the industry evolved since then, and what has changed in the medtech industry?
Interesting what's going on. Actually, COVID, Adam, is no longer showing up on my 5 year price charts because now we're in May. So I actually have to go back further to see that abysmal March 2020. Um, Definitely one area to call out specific of note is more predictive and real-time analytics. So folks want to know faster, quicker. Folks want to know what they can do based upon something that tells them something that's predictive in nature, as well as real time.
Can we talk about geopolitics and tariffs for a moment? How does an investor approach these headwinds? What's your outlook and how this affects MedTech?
So a number of areas I would call out, actually some bullet points I would call out. I'd say certainly tariff related, folks want to know about the origin of components and the current efficient and reliable supply chains and how that may change in stable areas, stable countries. I think a lot of companies have thought about or analyzed reshoring over the years. And I'd say what's been happening the past 6 months has caused a lot of companies to accelerate those plans on the reshoring front. Folks want to know what their risk is and exposure is as far as their supply chain start to finish, as far as taxes and logistics as well. And I'd probably say, Adam, that applies to everything. So chips, plastics, hardware, components, molding, etc.
So aside from a aging population, are there other catalysts that are acting as tailwinds that make the MedTech market attractive?
I'm still very optimistic on the sector and its level of attractiveness, but certainly consumers are smarter, far smarter, and far more aware. We contribute a lot of that to social media as far as products out there and interventions that are occurring out there. So, we look at many companies. So, we like to see data and we like to see the data related to outcomes of companies. I call it also financial efficiency. Companies are getting a lot more efficient. So not that they're on a mission to spend less and achieve more, but they're getting more and more efficient as far as understanding where all their expenditures are going and how to leverage them the best way possible. I'd say also MedTech wise, we used to see more of an industry that was focused on capital sales and placing units or placing interventions, and now far more emphasis now on the recurring model, pay-per-use model, rental models, and et cetera. If there's some 6 or 7 digit piece of equipment out there that a hospital wants or needs, they're going to get it. So it may not be a large financial decision up front, but it may come with a per use or monthly or quarterly expenditure.
Is there anything right now that you see could derail the cycle? I mean, how recession resistant is MedTech?
I would say across the board, it's largely recession proof. We saw that in COVID from top down or bottom up, where we saw cardiac and spine remaining to be very strong because a lot of the interventions were crucial in nature. And then we saw the less timely procedures tail off. But I think it's largely recession proof. And I think it will hold very strong. I'd say outside of that, cash is definitely not recession proof. So I would say, cash related to aesthetic procedures or cash related to co-pays or upsells or out of pockets certainly is not completely inelastic.
Are there any up and coming technologies or procedures that are areas of interest and investors should be focusing on right now?
A lot. So as a subset of a lot, I would say, some areas that we look at. So number one, certainly imaging modalities throughout the body, throughout different modalities. I would tell folks to look at energy delivery, both internal to the body energy delivery and externally delivered energy delivery. I'd also look at more software, predictive analytics, and analysis. I'd also probably, I think we're more efficiently garnering that information to adjust treatments. So if you have something, it looks like this, and this is what we can do to resolve it or put it off. And we're also involved with the resolving and putting off in a cost-efficient manner measured over days, weeks, years. I'd say also catching diseases earlier. So a lot of disease states are much better off being caught earlier or recognized earlier, or having genetic abnormalities, which will lead to those diseases down the road. So we're catching things earlier, and therefore we can offer better, faster treatments earlier to prevent disease states from progressing. So that's probably definitely something that is in focus and continues to progress well.
Anything else you want to add before we conclude the discussion?
I think what we look at in particular is a whole lot of innovation being driven by a whole lot of private and smaller place. I think that drive is far greater than it has been in the past, and a lot of that innovation certainly remains under the public's radar to some degree, although we continue to focus on it and predict. I mean, really, I would say that our goal here at the firm is to predict what MedTech will look like in the coming years, whether that's 2 years, 5 years, or 10 years, and understand how things are changing and what effective medical technology modalities are out there that are being developed and commercialized in the marketplace.
If listeners want to reach out to you, how can they do so?
They can certainly reach out to me via email, or they could find me at a random industry conference.
Great. Thank you, Jeff, and thank you for your time today. This is very informative. Thank you for everyone for watching. We have additional presentations and fireside chats coming up next, so don't go anywhere yet. Thank you and have a great rest of your day.
Thanks, Adam.
Thanks, Jeff.